Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya, Aneja, and with me is Bhatnagar, our markets editor. Well, Indian markets continue to remain volatile, but where are the opportunities and what should be your strategy in the last trading hour? We will discuss this and much more. But first, let's do one thing. Let's take a quick market check. So, of course, we are hovering around that 21,300 mark on Nifty. The high was 21,390. And as you can see, 21,325, that's the level where we are at this point in time. 70 points uptick there. Nifty Bank is in the red today, 244 points downtick there, 47,596. That's the level where we are at this point in time, and it's clearly the blue chips day today. Some of the names from the IT like Wipro among the top gainers for you, Tata Motors, Maruti, Britannia, all these blue chips, big boys doing really well in today's trading session. Hindalco also from the metals space, and on the flip side, among the losers we have Grasim down around 2% as we speak, 2043, that's the level there. Bajaj Finance, SBI Life, these are some of the other losers for you. But coming to you, Shell, quickly for a quick market check. Of course, markets continue to remain volatile. What looks good to you in this type of a market?
Well, actually, it's almost a quiet day ahead of a long weekend, which is also including Monday. Merry Christmas to all our viewers in advance. So that is what is preventing bulls from going all out. But what is interesting is that we have 21,300 as far as bulls are concerned. The index, as you very rightly mentioned, is 51 points higher. If you see the intraday high was somewhere like 21,475 as far as the cash market is concerned, and 21,400 as far as cash is concerned. So quite a nice move, I would imagine, in today's trade. And if you look at the advance decline ratio, Tanya, the action of course is minus the index. What I mean to say is that the index is keeping calm as of now, but if you look at the broader markets, you'll see a lot of hectic activity there. At the moment, somewhere like 1,300 stocks are in the green, some 750 on the red as far as the National Stock Exchange is concerned. We track 19 indices for you, 16 are in the green. That shows the broader demand for counters. Look at the Nifty 500, up 0.5%, and you have an advance decline ratio of 3:2. So things are fairly good. And I'd like to mention two important indexes. One is the Nifty Realty Index, 2% higher, 760. All 10 counters are in the green. The Nifty IT Index, 1.7% higher. Remember, it started on a back foot. All 10 stocks in the green. Similarly, the metal index, all 15 stocks in the green. So there are pockets of sheer outperformance and pockets of sheer strength that are being witnessed in the market. So it's IT, metal, auto. Out of auto, 15 stocks in the index, 14 are in the green. In the pharma index, out of 20, 16 are in the green. So it's a sector specific move that is coming in, and very, very sharp outperformance. seen in the PSU pack. So the index is quiet as far as the Nifty is concerned, but the underlying momentum, Tanya, is very strong.
Okay, absolutely. Underlying momentum is strong. That's the word coming in. And let's do one thing. Let's welcome our guest on the show today. We have with us Mr. Akshay Bhagwat, who is the Senior VP of Derivative Research at JM Financial Services. Very good afternoon, Akshay. Always good to have you on BT TV. Let's understand from you now, that how are you positioned on Nifty? What are the, important levels one should watch out for?
Goes, we did have a scare a couple of trading sessions back, but actually if you dissect the data and see the data points, FIIs have actually bought in the fall a couple of days back, and even in yesterday's trading session it was very clear looking at the market bread that 21,000 is there to hold for the December month. A new base is formed. The dips which the market was really eager to look forward to you have got the dip, and now the market is again started to move in its upward trajectory. So the all-time high of 21,600 should be revisited very soon, and the market should again be preparing itself to make new highs, conquer new grounds, and possibly 22K is what should be in sight of the market. So I continue to maintain a positive view on the market. Even if you look at the Bank Nifty is again taking the lead. In fact, yesterday it covered a significant ground over the Nifty index, although today it's a laggard because 48,000 in one sense is a slight resistance in terms of call writing action. But I believe eventually this too will catch up and you will see new highs being taken forward as we move into the new year for the banking index too.
Okay, absolutely got that, Akshay. And what about your top technical picks? I mean, which are the stocks that you would like to recommend for the near term?
So here, the first stock which comes to my mind, the first stock which comes to my mind is the IT index, and it has to be the big boy Infosys. Now, IT index was on a rampage a few trading sessions back, just got a bit subdued with the kind of the sell-off which we noted lately. But it gave you another opportunity to participate. Those who missed out on the rally, and Infosys has really done well. It has recovered from the support zone of 1520, 1530 zone, and I'm pretty bullish on this stock. Looking at the derivative parameters, the way the longs are positioned, I will keep a target till 1625. That's more of a trading target I see in Infosys. 1558 is the current level. So buy Infosys, keep the target of 1625. It's a short-term view. Your stop losses will be around 1510 on this trade.
Let's dig a little deeper as far as the IT index is concerned. Tanya, very, very strong moves coming in Wipro as well as Persistent. So one large cap IT stock, Wipro, as well as Persistent, up anywhere between 4 and 6%, and that too on huge volumes. Akshay, while you are at it as far as IT is concerned, how about a view on Wipro?
IT again has come out with all cylinders firing, and Wipro is especially the stock which is the leader today in the entire IT pack in terms of the strong price upsurge we have seen in day trading. So clearly the recent swing high of 450 has been taken off by Wipro. That's a very strong point where the momentum kicks off in the stock, and positionally and even for trading, this has seen today a strong breakout above the 450 mark. So that's the reason you have a strong momentum in Wipro today. So positional targets, I'm getting around 525. It may take some time, maybe 1.5 month to be more precise. From trading perspective, I think the stock is heading for the levels of 490. That's the target you should be working with. Supports are 440. Keep a stop loss below 440. Maintain a positive in Wipro for targets of 490 short term and 525 in slightly medium term.
Tanya, it's really interesting. All the three stocks are buzzing in the front line. TCS at the moment 38.45, 1.5% higher. About 723 crores worth of transaction happened. Infosys, we've already discussed, 1562, 1.7% higher, 808 crores. And of course, the likes of Tech M, Mahindra and Mahindra, Infosys, all showing phenomenal traction. And the two leaders, Persistent and Wipro. So it's across the board the kind of rally that we are seeing. As also, Tanya, the PSU space is buzzing. Bama Lorry up about 17% now. Very strong moves, 220. It's no point asking Akshay for a technical view, but maybe he can just do a chart check. After 18%, it's very difficult to take a position, especially after before a 3-day rise. Akshay, your view on Bama Lorry, what are the charts telling you? Very strong volume here.
Absolutely, Shailji, very strong volumes. And the reason for such a strong up move is the break of the levels of 200. Now, 200 was a very strong resistance. We visited this way back somewhere in 2018, and all-time highs have been taken off with strong volumes. Is really a good setup on the technical charts. So, yes, for fresh entry, it's a bit dicey because now the risk-reward payoff doesn't work well for you. But you will get the momentum for those holding onto the stock. I see targets of around 260 to 280 very soon. If you want to participate on the long side, ideally 210 would be a good entry level whenever you get it. You should get it in the short term soon. 210 is a good entry. Keep a target of around 230, 35 for short term trading. 200 is a support from below which will be your stop losses. So a positive view just for fresh entry. Maybe you need to just wait for a dip of 8 to 10 points. That would just kind of set things for you.
Okay, absolutely got that, Akshay. And let's discuss Gas Authority of India also. If you could pull up that stock as well. New 52-week high for this particular counter, 23% return in 1 month, and if we talk about 6 months, it's 45%. Where is this stock headed, and what do the technical charts suggest for Gas Authority of India, Akshay?
Yeah, Tanya, most of these PSU names have been on a very strong roll, and every correction has been bought into. Even if you look at Gale a couple of days back, 135, and today back we have money flow chasing these sectors. So the momentum is very strong here. The FNO data too suggests that long are being added in the stock. I think it should soon be visiting targets of 175 very soon. Maybe 10 to 12 trading sessions is what the time you need to give this. Support of 145 has been set now, and maintain a positive view for a target of 175 in Gas Authority.
Okay, absolutely. And discussing one of the other buzzing stocks, Akshay, and that is HFCL. So if you could pull up that stock as well, new high for this particular counter as well, 82.34. That's the level where we are at. 7% uptick there, 6.5%. What do the technical charts suggest for HFCL? Will the momentum continue?
Yes, Tanya, this momentum should continue. Actually, if you look, I'm just seeing the slightly broader chart of HFCL, and if you look at the kind of broader consolidation this stock has been right from 2021 till date, a clear signal that 65 is the base and 90 is the resistance. And if I suggest that if you are buying this stock, go for long-term targets or slightly medium-term targets at least, because the promise of 125 to 130, the probability of the targets of 130 is higher in this stock because it is setting up for a strong consolidation break. Trading targets are small, maybe again from 86, 87, you might see a slight consolidation phase. But I believe buy this stock, have a time horizon of 2 to 3 months, and 130 should be on the cards. Support is 70, so your stop loss will be below the support. Buy for medium term for targets of 130. Positive view on HFCL.
Okay, absolutely. Let's discuss one more stock, Akshay, and then I'll toss it to Shail. So let's discuss LIC because the stock is in focus because of the news. The insurer got an exemption from the Department of Economic Affairs to achieve the 25% minimum public shareholding threshold within 10 years of listing in 2032. The department termed the decision public interest. So 4% uptick there. How do you look at this news, and what do the technical charts suggest for LIC?
See, technically there is a slight resistance here for LIC. As I see, 550 is the level where the stock is slightly vulnerable to profit booking. This levels are from a short-term perspective. So, I would be more comfortable if we see a breakout above 550. So right now, as I see that at 518, there can be a slight recovery in the stock. till 540, which is the recent swing high. If you want to buy this stock, yes, it should be on your buy list, but keep a conservative target till 540. This chart should really be interesting once it gets past the 550 mark. Then we can really look at big targets in LIC. So buy, but with a short-term trading target till 540 is what my recommendation will be.
Okay, we seem to have got confused between LIC of India, which Tanya asked, and LIC Housing Finance, which Akshay has responded on. That's not a problem. It's okay. Such things happen. No issues. No issues. Just it's perfectly fine. It's okay. Such things happen. So let's just take a detour as far as markets are concerned. We are already at 247. That leaves us with about 42 minutes of trade as far as today's view is concerned, and we've discussed major breakouts such as Gas Authority, Bama Lorry, as well as Momentum Boys, LIC, and a lot of IT stocks such as Wipro. Let's just pay attention to what is happening in terms of volume. That's a little more critical because that defines where markets and which stocks are likely to move in tandem with both price as well as volume. Okay. In terms of volume buzzers within the National Stock Exchange 500 index, the Nifty 50, let's look at some sensible names which are occurring fairly often. We have Castrol India, 162.75, 7% higher, and the volume of 3 crore 65 lakh shares is 6 times the average that you see on a 5-day basis. What else is interesting? Pharma. Across the board, there is huge volume breakout coupled with a rally. In the morning, it was Sakshi who perhaps suggested that this is the fear of COVID that is running deep through the Lal Street, and therefore you are seeing a lot of accumulation of pharma stocks. Gland Pharma, 1873, 3.6% higher, 3x volumes, which is 8.58 lakhs. Let's look at where you have a low ticket as well as a decent price rise. Okay, Laurus Labs, 413, 4% higher, 87 lakhs shares traded. It's a 4x volume on Laurus Labs. What else is moving? It's Cipla and Lupin, 1229 for Cipla, 0.5% higher, Lupin also 0.5% higher. So maximum traction is in Laurus, Gland, and Natco Pharma as far as mid caps are concerned. Amongst the large caps, it's Divis, 1.8% higher, 3697, and this is 2.4x in terms of volume. Let's also look at the IT pack because this is what Akshay discussed with great vigor and enthusiasm. So in terms of volume breakouts, it's only Wipro, 1.6 times. Persistent, Infosys, nothing much here, but Wipro is something to look at if you are sort of wanting to punt somewhere ahead of Monday. And circuits, what are the circuits that have come in? I see one on Bama Lorry, that's really interesting. It's a 20% circuit, almost there. We have one on Axis Cades, 10% higher, 675. These are the massive ones that I would like to talk about. There are so many names, but let's keep them to what is really interesting in the market. So that's how the broader market is. Tanya, what are you watching?
I think, Shell, I want to discuss some of these metals, metal names with Akshay. So metal index, if you see Akshay, that's shining today, 1.5% uptick there, and we have Nalco, Hindustan Copper, Steel Authority of India. These are some of the buzzing stocks, up and around 3 to 4% in today's trading session. So any stocks that are on your radar from this space?
Yes, metal stocks have been buzzing, and if you look from this space, as I understand, this it's more about catching the momentum here in majority of these names here. So here I would be looking at Steel Authority of India Limited because it's a small ticket stock, and the potential the way the stock has bounced back since the last couple of days, profit booking is really, excites me. I think the targets of 125, 127 should be on very soon in Steel Authority. So consider buying, sale. The futures and options data too are hinting for an uptick going into the January series. Support zone is 105, target would be 125. So the first stock should be Steel Authority of India. And from the metals and mining space, Vedanta is another chart structure which excites me here. An inverse head and shoulder breakout seen a few trading sessions back. After revisiting the breakout zone, we are getting an opportunity again in the profit booking which saw a couple of days back at 260 levels. I'm keeping targets still around 275 to 280 from a trading perspective. Supports are 250, so keep stop losses below supports and consider buying Vedanta for targets of 280.
Okay, absolutely got that. And Akshay, let's discuss Tata Motors as well. I mean, this stock is on a roll, 725 as we speak, 2.3% uptick there. And on a YTD basis, if you see, the stock has given 84% return to its investors. So, what do the technical charts suggest for this Tata Group company?
The auto names started off very strongly as we began the day today, and Tata Motors has been one of my picks, which I had recommended on your channel as my Diwali pick way back when it was around 640, 650 odd levels. I'm still bullish on the stock. The chart structure is absolutely strong, fantastic charts. Data too is very buoyant from the derivative space. I believe the recent swing highs of 735 should be taken out soon. So if you're considering it from a trading perspective, I'm keeping targets till 755 to 760 on the upside. 725 is the current rate. Support base is 700. So keep a stop loss below 700. Target around 760 to 770 in the short term space in Tata Motors.
Okay, we are now almost at 255. Let's just pay attention to what the Nifty is doing. 97 points higher as far as cash is concerned, 21,350. That's interesting. What are the pullers and draggers for this index when it comes to the plus and the minus side? Let's see. We have strong traction in IT. It's going to top that. Okay. The first three top contributors are Infosys, Wipro, and TCS, contributing respectively 25, 11, and 10 points in this 91-point uptick. What is pulling the Nifty down? It's ICICI Bank, HDFC Bank, Bajaj Finance, and SBI, respectively 13 points, 11 points, and 4 points. So banking is actually pulling the index back, and it is IT that's leading it higher. HCL Tech as well, 2.5% higher, 1453. Let's drill a little deeper and look at volume bursts within the Nifty 50. I would imagine there is none today because we are headed for what is a long weekend, and people will be hesitant to take long positions, and I am so wrong. Divis Lab 2.4x volume, the counter is up 1.8. Britannia 5162, 2% higher, 1.77 times volume. Wipro and Tata Motors we've discussed, so it's Divis and Britannia. Sharp moves here on Britannia, Akshay. Would you hazard a guess where this counter is headed? We have 5160 on the charts, and about 5 lakh shares have been traded. This is obviously a high beta counter.
Yes, high beta counter, and there is a very strong resistance as I see right now on the charts at the level of 5275. So these levels were visited a few months back, and the current momentum might temporarily fade off around the levels of 5200, 5250 zones. So I'm just labeling it temporary because mild profit booking is what you might see. Otherwise, I believe after that mild resistance phase, ultimately still higher targets are likely in Britannia because the broader or the longer term charts are still very strong. I foresee targets still around 5700 within a time frame of around a month in Britannia. The breakout zone, as I mentioned, is 5250, so that's the level you need to keep a note on. Hold the stock if you have for the breakout trades. For fresh buy entry, either buy above breakout or wait for a slight dip near 5075 for the things to cool down and then participate on this breakout trade.
Fair point. And with that, Akshay, thank you so much for the wonderful ideas that you've shared, especially the ones on Wipro and Tata Motors. Merry Christmas to you and everyone at JM Financial. We hope that 2024 is brighter still compared to the phenomenal gains that you've made in 2023, and all the best to you.
Merry Christmas. Thank you.
Okay. With that, ladies and gentlemen, we'll take a quick break, and on the other side of this very brief interval would be a very dear friend, Rajat Bose, a long-term viewer of the market, a person who has extreme grasp on where stocks are headed from India's most delightful city, Kolkata, joining us. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today on what is the final weekend as far as the day before the weekend as far as prices are concerned. It's Friday and we are headed into a long holiday, which is also Monday. So trades are few and trades are far between. The Nifty is now quiet. Actually, it's edging up now, up about 100 points as far as the index is concerned. And it's the IT space that is pulling the index higher. Our friend Mr. Rajat Bose joins us from India's happiest city, Calcutta. A very warm welcome to you, Rajat Bhai. What a pleasure to meet you finally in 2023. And you're surrounded by books. That's a lot of wisdom. Tell us what you think about where the markets are headed. What are you doing in terms of building up portfolios, and what's the view ahead?
Thank you, Sel. Thank you for having me, and season's greetings to you, your team members, and all your viewers. I would say that we have seen one big fall. That was 3 sessions back, counting today's one as well. But that was thought to be very damaging, but it wasn't so. The thing that I give a lot of importance to is the 9-day exponential moving average, and that 9-day exponential moving average is currently at 21,202. So it's a real-time value I'm talking about. So unless you see the market falling below that on a decisive manner, there will always be an attempt to scale up. Of course, that damaging fall 3 days back, I mean, that might still keep an overhang over us that as to how the market is going to behave. For that, I would rather refer to certain levels. If we cross them, then we would continue to see the bullishness that is there in the market. That is immediately to 21,493 to about 21,507. This range is very critical, and once this range is taken out, then 21,650 could be another level to watch out for. On the weekly chart, the major resistance is around say 21,800, and we may be a bit cautious because of that fall 3 days back. But so long as, I would say that so long as you see that the market is not falling below the 20-day moving average at 20,831 currently, roughly you take it 20,800. So long as you see that it is not falling below that, it can always bounce back, because there is no point thinking that we are headed for a downswing. Although there is some technical divergences on both Nifty and Bank Nifty, and also the similar kind of concern may be seen in the CNX mid cap. But so long as the price doesn't break, I do not give much value to these early indications.
Well, that's a very sensible view coming in from a very long-term viewer and watcher of the Nifty. Rajatji, let's just look at the medium-term view on the market as well. And there is a common consensus amongst people who put in a lot of money that good times are there after the good times that we've already enjoyed in 2023. When you look at the broader projections on other indices apart from the Nifty, what are the clues that you are getting? Where do you see maybe Nifty by March 31st, or any other index that you think is giving stronger signals than the Nifty that it will move up sharply?
Well, as of now, Shail, one thing, of course, I would like to request you to refer to me as Rajat, because we are old friends. Don't say Rajat ji. Rajat would be better. Anyway, coming back to the indices, what I feel is that first, this is a trend, and I'm over a period of last 3 decades, I have become more of a trend follower, in the sense that we try to preempt the end of the trend or end of a bull market, but sometimes the market actually surprises us, and surprises us in a big way. So that's the reason why I said that certain parameters, unless broken, it may continue. But what are the goalposts? I've already mentioned that 21,800 could be a major resistance. I don't think that it would cross in a hurry. It may consolidate between, say, something like 20,500 and 21,800. And one more thing, Shail, that whenever there is this parliament, the election at the parliament, you will see that January, February, around these months, there would be some kind of seesaw movement, some kind of trading range-bound movements. And after that, if the market believes that the current dispensation, the political dispensation at Delhi is going to be coming back, and which is more of a possibility than anything else, then you will see the rally continuing. But some profit taking, some readjustment in the portfolios, like I see some profit taking happening in PSU stocks, because if you look at the weekly charts of many of them, they have gone up in a vertical manner, and generally these vertical swings in the weekly charts are corrected. Maybe they may take a bit of time, but you will see some corrections happening. But those stocks that have not participated, like I was hearing you and you were mentioning pharma and all, even the conventional IT stocks like Infosys, TCS, Wipro, these kind of stocks might join in. Pharma, maybe the Sakshi might be right that it is the COVID that might be haunting us, and that's why a renewed interest in pharma has come. But there could be some new interest coming in to the old biggies among the IT stocks, and some of the banking stocks that might come in. Of course, HDFC Bank and ICICI Bank are weak today, but these stocks have not given very big moves. So keep a watch on them.
Okay, absolutely. Got that, Mr. Bose. And this is Tanya joining in the conversation. Very good afternoon and festive greetings to you as well. First of all, Mr. Bose, if we see on a year-to-date basis, Nifty index has gained 17%, mid-cap is up 42% and small-cap 44%. I want to understand from you that where are the opportunities, because experts are now saying that large caps, they are going to participate in the rally going forward rather than, mid cap and small cap. So I want to know your thoughts on this one, and where are the opportunities? I mean, any long term picks that you could share with us?
See, I tend to think that large caps are going to do well, and the you can corroborate the movement in large cap because the large cap blue chip stocks in our market generally see a lot of FII backing. So if large caps have to move, FIIs have to come in a big way, and large caps might attract because now the pathway seems to be very much clear that there is not much uncertainty there. So putting money in large caps and see large caps must promise good returns because the US interest rates are still very high. So if FIIs have to come, they must get at least 10% plus returns from large caps from the current levels, and the large caps more or less consolidated. Say things like say stocks like Asian Paints, stocks like ITC, stocks like say Divis Labs, or say even United Spirits. These kind of stocks, apart from the IT stocks, IT majors, and if you allow me to add, I would say there is a set of uh, software stocks that can also come in, that can also show big rises because they are the ER&D stocks. ER&D stocks, when I say ER&D stocks, one of them recently got listed, Tata Technologies. Apart from that, you have Tata LXI, you have Larsen and Toubro, you have Danlaw Technologies, because these are somewhat different type of software stocks. Here, there is no fungibility among the developers or the software engineers. Here, you actually need to be a domain expert, and you would be with a company and doing their project. Like for instance, say any company that is say catering to Airbus or Boeing or Pfizer, these kind of companies, and they tend to be there for say 3-4 years, and the margins in this arena would be far greater, much better and greater compared to the conventional software stocks. So they might come in. I must disclose that I have some of them, especially the two names, LTTS and Tata LXI. I personally hold some shares in them. I see huge long-term potential. The market is very big out there, and that would pan out in a big way because we have the capabilities. Because I studied LTTS, and while teaching at IIM Calcutta, a student of mine told me that their company was giving a tender in which LTTS participated, and they said that they found the company to be a very capable, very solid company. So that kind of thing gives me some confidence that over the long term, I think these kind of companies will do very well.
Okay,
Let's
absolutely.
look at other part of. Yeah, Tanya, please continue.
No, no, Shall. Actually, I wanted to know more about these mid cap and small caps also, if there are any opportunities there as well. So, Mr. Bose, quickly, any stocks on your radar from broader markets that you would like to recommend?
See, I would have recommended one stock I was very keen to recommend, but that stock is already hitting circuit. So, I mean, I don't want to create any problem, but that is Shriram Pistons. I mean, it has got good return on capital, and the technical chart is also showing a saucer kind of a pattern. So there is a considerable up move left, but if it is a stock that is hitting circuits of 5% every day with puny volume, I loathe to recommend that. But that's a good company from a fundamental perspective, and it can really work wonders because its operating margin may not be very high, but the return ratios are pretty encouraging from the fundamental point of view. So fundamental strength as well as technically, it's a good pattern, and you can buy on declines. I would not say that you buy on this heady run.
Okay. Let's keep 1277 on Shriram Pistons in our memories, and we'll again touch base with Rajat on that one. Rajat, let's look at the parts of the market which cause a concern. Both of us have seen issues related to IPOs, funding patterns, the listing surges, the gap ups that happen, anchor investments, QIPs from such companies immediately after raising funds from the market. What are the segments or patches in the market that you think are a bit on the edgy and nervy side and which bother you?
See, Shail, I would say that small cap and mid cap segments, there are n number of stocks. Right now, I do not want to take particular names, but one thing that is there, that you will see this mid cap, especially small cap, and some among the mid caps also participate along with the IPOs. And IPOs earlier, if you read Kindleberger or other such histories, stock market histories, IPOs are the last stage of a bull run. But there is a little twist that is there here, at least at current times. What is that? Earlier, whenever these IPOs used to happen and they could command such high premiums, we knew that very soon there would be a serious jerk in the market and it might correct. But I would say that despite the high interest rates, you look at the Fed balance sheet. Fed balance sheet has actually shrunk only to, it is $2 trillion less. So the central bank balance sheets are still very much filled with bonds, meaning the money supply is pretty huge in the market. If that continues to happen, then assets, especially financial assets like stocks, they don't fall. And they don't fall, even if they do fall, and that fall is corrected very fast. So I would be a little wary of buying into small caps right now, because in some cases when I tried to search for a stock's balance sheet, I couldn't find only the first page, that is, we are submitting this to BSE or NSE, but I could not get the annual report, I couldn't download. So that is the problem with small caps. So I would be a little wary of small caps, participating in small caps right now.
When you look at the SME part of the market, Rajat, does that cause a concern to you? Oversubscriptions of 300 times, 700 times, funds asked for are about 700 crores and they are able to gather 1 lakh crores in some applications. Are these signs pointing to extreme exuberance?
You are absolutely right, Shail, that this is a sign of extreme exuberance. But the problem with SME area is that not only here, not only the investors, they may get caught, but also the merchant bankers, because if I'm not mistaken, then they have a certain market making market making responsibility that doesn't end with the public issue. It continues for quite a while, maybe more than a year or so. So that segment is pretty much problematic at the moment, and these are actually signs of an overheated market. But as I said, that I have learned one lesson: if monetary liquidity monetary liquidity continues to be there, it will not see, even if you see a big fall, you will not you will not see it sustaining. So lots of people actually say that there was a fall, you people were very apprehensive, but see the kind of rise that has happened. So that is happening because the monetary liquidity has not come down much.
Yes, absolutely, Mr. Bose. Got that. And now let's get back to the markets and check what the markets are doing at this point in time. So clearly, Nifty Pharma we have already discussed, but some of the stocks, some of the blue chips buzzing today in today's trading session. We have Wipro, HCL Tech, Hindalco from the top gainers list. And then among the sectors, if you see, Nifty IT is firing on all cylinders, and then we have metals as well that is shining, and then reality space as well. And among the IT counters, Wipro, Persistent, Infosys, these are some of the stocks that are on a roll. And how Wipro 6.7% uptick there, 463 is the level where we are at. Persistent also 272, that's the level there on Persistent. No, okay, 7434, that is the level on Persistent, beg your pardon. 4% uptick there as well. Emphasis also buzzing in the trade today, 3.8% uptick there. 2723, that's the level. So clearly Nifty is shining in how in today's trading session, both large cap and mid cap IT stocks performing really well. Mid cap IT, if we talk about Mr. Bose, any stocks that are on your radar, because we have been talking about KPIT, Persistent, and how these stocks have outperformed the large cap IT names, but any stocks that are on your radar?
Tanya, if you allow me to recommend one stock today, which should be bought among the IT pack, it should be Wipro. It is not just because there is newfound interest, but the technical pattern, especially on the weekly chart, is so great. I have seen this pattern. I have seen not only in the IT pack, but this kind of pattern I have seen in earlier stocks like RBL Bank, like NISCL. All of them have seen major moves. So Wipro, there is every possibility that it is likely to go up. Where it is headed, immediately 500 to about 520. After that, it can even test the range between 550, 600, and that could be a matter of weeks to a few months, maybe by the time of April, May, when the elections will happen. This stock is a very safe bet in the sense that your stop loss, I would say that you can put a stop loss below 400, and if you are really a long-term investor, then put a stop loss below say 375 or so, and it has a potential to take it up to 650, 700. I personally do not hold any position in Wipro.
Okay, so that's a sensible way to look at as far as prices are concerned. Remember, Wipro has been a relative underperformer when it comes to IT stocks. I'll give you the 1 year performance in relation to other IT stocks. IT in itself has been an underperformer, but let's look at how Wipro has shaped up over the last 1 year or so. Up just 11%. And Infosys is below Wipro actually. If you look at the 1 year performance, absolutely flat, 1% higher. Wipro's up 11%. TCS up 16, and the likes of Birlasoft have actually given a return of 144%. Persistent has given a return of 83%. So you actually look at swing trades when the trades start to break out, and as Rajat was saying, this is one of those wonderfully rare charts that has come up with a trade today. Very strong volumes actually when you look at Wipro's transactions as of now. I'll give you a number. It was a breakout when we had earlier seen it. Just a moment please. You know, there's so much of software here that it becomes really difficult to keep everything live and ticking. Wipro has seen a lot of volume today, and that's visible at 2 crore 15 lakh shares. When you look at comparisons with 5-day average, that's 2.29 times. So a price breakout, a volume breakout, and a stamp from Rajat Bose if one looks at the medium term projection on Wipro. What else is moving? Rajat, you mentioned HDFC Bank and ICICI Bank as ones which hadn't performed really when it comes to the fantastic rally that's seen on Bank Nifty as well as other banking stocks, the broader market. What do you think 2024 holds for them, these two stocks?
See, first to talk about HDFC Bank. HDFC Bank, I would say that it has been more of a sideways movement. If you say that 1750 to 1450 is the broader range, and the shorter range is about 1750 to 1575. Now that it has already come very close to 1700 and currently ruling, I think, at 1669. So this still has a possibility that it can actually go up and test the all-time high around 1757, but that needs it to sustain above 1700. But now it has already given a good run from late October to current date, so there could be a minor dip, but that minor dip will not take it down below 1625, where the I think 1632 is the 20-day moving average. It is not unlikely to fall below that, but it can go up and retest the all-time high of around 1757. And the other stock that you asked was ICICI Bank.
Yes.
Okay. Regarding ICICI Bank, I would say that ICICI Bank gives you an opportunity to buy once it comes to somewhere around, say, 975. But sometimes the problem that happens is that it is now at 995 and you will wait for 975. You may not get that opportunity. So buy partly here and buy around 975 and hold a stop loss below 960. On the upside, 1050 to about 1080 would be the range for ICICI Bank. At lower levels, you will see some buying. One thing I would like to highlight in case of stocks, be it HDFC Bank or be it Wipro or be it ICICI Bank, if you look at the chart, especially on 4th of December, you will see 33 million volume, and then there is the very next day also 31 million shares. This means that somebody has taken a big position. This kind of the fall that is happening is actually an opportunity to buy, because sooner or later the same buyer or the same cluster of buyers will come in again to buy these stocks, because they have sensed an opportunity, and that opportunity is not just up to 1050 here or 1700 for HDFC Bank. They will continue to buy because they sense an opportunity. This was there in Wipro. Wipro had a correction for 3-4 days after a huge volume of about 20 million shares, and then the very after 3 days of correction, then today you get 21 million volume. So these volume figures, if you track, you will see that actually some people who are taking positions for at least medium term are buying in a big way. So these are the opportunities that I can spot at the moment.
Okay, absolutely. Lot of opportunities, Shell, as Mr. Bose was pointing out. But on that wonderful note, thank you so much, Mr. Bose, for sharing all these wonderful picks with us. And of course, your
Yes, I also really enjoyed.
outlook on the markets. And of course, Merry Christmas to you. We are heading into a long
Same to you,
weekend.
Tanya.
So enjoy your long weekend and have a great year ahead. So Shell, coming back to you now, we are still hovering around that 21,300 mark. High was of course 21,390 today, but it's the IT day today, right? But I want to understand from you, why is IT doing so well today?
Yes. Sakshi, I'm so sorry, Tanya. I think the move comes from Nasdaq, and the fact that there is a definitive kind of an understanding that rate cuts are in the pipeline. I just would like to make a point that it was the Nasdaq which fell the maximum when the corrections set in as far as prices are concerned on Wall Street, because technically and business wise it is the IT companies that borrow the most at prices like 1% interest rate, 2% interest rate, and then they do a large amount of acquisitions. Now when the borrowing costs go up 4 times, the growth engine, which is acquisitions of IT companies, stops. Now when the cycle of rates is going to turn, it's the ones that fall the sharpest rise the fastest, and therefore you will see what is happening. I gave you an example. Infosys is up 1% in 2023. The Nifty is up 19%. Just
Yes.
imagine this. So
And the indexes
this
also
is
shell
the
up 20%
outperformance,
almost.
potential
on a Y-to-D
outperformance
basis.
Exactly. Yes, that is what I am trying to say. This is the potential of outperformance sitting within Infosys. And this is when Infosys has gained, let me just give you a percentage in terms of what the stock has rallied in the last 1 month or so. So it was at 1365 on November of 11th, and we are at 1562. 1 second. It's up somewhere like 9%, right? So 9% is up in the last 2 months, and after that 9% rally, it's flat year to date. So this is the reason that people will buy deep value, and therefore stocks like HDFC Bank, ICICI Bank, Infosys. That's the question, right? The blue chips will outperform the broader markets now because they haven't done anything over the last 6 months, 9 months, 10 months, despite the fact that we have a roaring rally on the Lal Street. So valuations are fine, prices are fine. You just need the patience to stick around and remain invested for a longer period of time. Tanya.
Okay, so do you mean, Shell, that large cap IT names will perform better than mid cap IT in 2024? Am I right?
My bet is that mid cap IT will now flatten out. You have seen Persistent go up 83%. You have seen Birla Soft rise 144%. You have seen the likes of Coforge rally so sharply. And
Yes.
you see, markets are all about relativity. Coforge is up 58%. HCL Tech is up 37%. Tech Mahindra is up 23. So I'm just trying to say that when you look at relative valuations, you will only put in money where you have a strong balance sheet, where there is visibility of numbers, and of course relative underperformance. Now with the recession fears abating in the US, those companies will start spending on IT. Where will that money come? TCS and Infosys. So these are the bets. Why is Wipro rising? Wipro was an underperformer till yesterday. आज ही तो 6% बढ़ा है.
Right.
And if you look at 1 week ago, 2 weeks ago, Wipro was full of bad news. People are quitting. Mr. Premji has called management meetings to take stock of what the position is. It has been a relative underperformer when compared to TCS, Infosys, and HCL Tech. Therefore, the money has come into Wipro because valuations are juicy. People know that the management will be set straight. एक ही क्वार्टर लगता है ठीक करने में लोगों को, वो हो जाते हैं.
बिल्कुल, और इसी नोट पे शेयर, you explained it really well, and it was the IT day. So on that wonderful note, thank you so much, as always, for sharing excellent data with us. And on that note, ladies and gentlemen, we are closing in the green as we speak. 21,331, that's the level on Nifty, 70 points uptick there. And we are also heading into a long weekend, so enjoy your weekend, and I hope bulls will be back with us on Tuesday as well. Refreshed and charged up like us. So with that, it's a wrap. But stay tuned, lots more coming up for you only on BT TV. Stay tuned and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, where risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.